Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had an absolutely amazing Thursday, as we're going to do what we do each and every day, taking a look at the same 10 to 12 futures markets from an educational perspective, identifying potential breakouts and reversals. If you're new to the channel, do me a favor, click that subscribe button and hit the notification bell so you get the alerts as they come around. Let's go ahead and get started. So this morning, we're up a little bit in the S&P. We had a live trade room yesterday, and we were taking a look at this area for a potential breakout. Now, we didn't get the breakout filled in yesterday's trade room. It actually pulled back later in the day. However, we did wind up coming and basing before the level and breaking out in the Globex session. Now, we've not gotten a whole lot of movement after the breakout from the Globex session. So if you caught that, I think it's okay to take your stop and move it to break even. That would be the thing that I would look at doing here, would be taking it from moving it to here, up to break even, or maybe even underneath this pivot. If you didn't catch that breakout, I think the markets are giving us another opportunity for a breakout above this new all-time high. Where are we looking to short? We're not. When one of the things that we talk about is we don't tug on Superman's cape, we don't spit into the wind, and we don't short the all-time high. It doesn't make any sense to do so. It's going to be one of the things that keep ourselves a little bit guarded, if you will, against shorts in this all-time high environment. So this would be the breakout level above this 312 half. Next would be the NQ. So in the NQ yesterday, we didn't have the same breakout setup. We had a reversal trade, and that's what we got. We got a little bit of a reversal. This was a confirmation level, so you may or may not have taken the confirmation on the reversal, as price has now rallied up from that area. So if you did take this, take your stop, I would say, and move it up to lock in some of those profits. You may not have taken it because it did violate the level before coming back out, which would have invalidated the entry. However, your stop would have been below this area here, so it didn't go below where your stop would be. So either way, still an acceptable opportunity. You can still look at a potential for a breakout on this one above this high, but it would need to have the basing once again in front of the level. So keep an eye on both of those areas for today. Next would be crude oil. So in crude oil, we're between our levels of demand and supply. We added this level yesterday as a potential on the 15-minute for a solid reversal, and so we're still in between that zone. And then gold, we are above our little gold area in here, where price would rally through. We did actually have a little bit of a breakdown in gold yesterday in the late afternoon, and price came down there towards the end of the day, before then popping and rallying back through here. So now it's just kind of chopping sideways. I think the next, to me, most obvious leg would be for price to continue to move down from this area, as we're putting in a little bit of a bear flag pattern in here on the 1 hour chart. So, but our 4 hour is pretty, we don't have a definitive trend direction on our 4 hour, which makes that a slightly lower probability trade in and amongst itself. But interestingly enough, on this 4 hours, we are getting pretty significantly lower swing highs, which indicates that there is some weakness. All right, looking at the bonds and currency markets, in the bond markets, in the ZN, which is our 10-year note, we are still above our level of supply that we'd identified for a reversal. Price has not come back all the way to that area, so not a whole lot to add on this one. And then also in the Aussie, yesterday we talked in the Aussie about this level becoming a reversal. It was an area that was broken on the FOMC news. Price rallied up, and so we left the level in place. I still think it could be valid. We came close to getting filled on it yesterday. Unfortunately, missed it by just a little bit. So I'm actually going to remove it at this point. Since we came so close and didn't get filled, I'm going to remove it at this point, and we'll see if it comes back into that region. The area of supply is still up in here for a potential reversal. In the euro, we are, yesterday in the euro, I talked about the fact that we were in between some levels, and it was not giving me a good feeling one way or the other, and so I pulled my euro level off the table. And so now when I look at it, I'm identifying where are some decent reversal points. And my next closest one would probably be this speed candle here, right? The origin of this move up, and your stop would have to go probably below this pivot in that instance. And so that would really be probably the next quality level. You could go up to this area in here if you'd like as well. My fear is it's not a fresh level because of this wick that was formed right here, but we could see price come up into here. I think the better opportunity would be if we get some sort of a basing in here, although the price pattern would still need to form in that area. Next would be the Canadian dollar. So this was our level yesterday in the Canadian dollar, was price hitting this area and then rallying back up. We got a little bit of a move away from there, although we stayed inside of this candlestick for we finally popped out of it 1, 2, 3, 4, 5, 6. On the sixth candle, we popped out of it. So that would have you taking your stop and moving it to break even, and then we came back down into here. So chances are you probably missed out on most of this movement on this one. If you follow the 6 candle rule, this is one of those times where the 6 candle rule gets you out a little too early, and then we've come back up into this confirmation short. Now this confirmation short, we came into the level. We had a little bit of chop here just before the level, which makes me a little bit more cautious. So if you decide you want to take this, we're just coming out of the level now. If you decide, okay, I want to give this a go, I don't know that I would keep my stop all the way above this high. I would probably take my stop and put it here. Take and reduce your exposure, because in my mind, you've got to get through this and you've got your target down here. So you want to reduce your exposure in this case, and you might want to go to the 15-minute chart here and reduce your exposure maybe to this area as your stop loss, knowing that my first target is probably going to be right about here. Okay, and then last but certainly not least, let's take a look at the Great British Pound and the Japanese Yen as we wrap up the week. So the Great British Pound, we came back in. This is the level we talked about yesterday in the live trade room, was price coming back into the retest of this triangle pattern. Price did give us a nice little touch and go on a nice move away. So that one moved about 4-1 outside of that level. To its opposing fair price value area. So at this point, I'm going to take this one and remove that level. Hopefully you caught that one and was able to catch a little run. It also, the breakout came from that triangle area. Now this is really, looking at the 4-hour chart, we're still, in a down, well, we were in a pretty strong downtrend. We've now started to come back up. And so now it's basing a little bit more in that we don't really have a good strong trend direction zone. So there's really no definitive moves to be made on that one. Same thing with the Japanese yen, as we are just kind of still in a sideways chop. Not a whole lot to add in here as of yet. Caught one little trade on the yen on Wednesday. So I think the next level would be probably this one up in here if price gets us a reverse into there, but your stop has to be somewhere up above this candlestick in here. So overall, heading into the weekend, make sure there's a chance that people will be taking profits heading into the weekend. There's also a chance that we'll see a little bit of a run off of this breakout. So if you decide you want to hold things over the weekend, make sure that you utilize hedges and options on futures. Make for an excellent tool for hedging. And so make sure that you take advantage of that as they come out. So I hope you guys all have an absolutely amazing weekend. Those of you that are Traders Army subscribers, I'll see you on the Sunday night live trade room. Everybody else, I'll see you on Monday morning, Daily Market Commentary. See you all.